So we have broadcast for the participant. We are live now. Just give me 1 minute for Facebook Live, please.
We are having 89 participants right now. The numbers are keep on increasing.
Questions to process or this one we largely have few anyone that you want us to
I think it's up to audience. I totally leave it to you, and I don't mind answering tough questions.
Essen, are you done with the settings? Shall we begin?
Yes, we are live.
We are live now.
So we begin. Okay. Bismillah ar-Rahman ar-Rahim. It's an honor for me, Mohammad Farid Alam, to be to moderate this session on a very timely and topic selected. It's recovering from COVID-19, Apex Regulator, corporate and capital markets perspective. We are joined by Mr. Ashfaq Tola, who is the chairman of the Economic Advisory and Government Relationship Committee, and Mr. Faridullah Sheikh, who is the president ICAP. And our chief guest today is none other than the chairman SECP, Mr. Amir Khan. So the program that we have planned is such that after the welcome addresses, the presentation by the chairman would be for 30 minutes and followed by the question and answer sessions. And we have had a lot of rounds of questions that we will try to answer, and we are getting the questions and the questions can also be put on the webinar on the two sites that have always been taken care of by my team. I would request Mr. Ashfaq Tola, the Chairman Economic Advisory, to welcome the SCP Chairman.
Bismillah ar-Rahman ar-Rahim. Thank you, Farid Bhai. I am sitting in Nathia, really enjoying my vacations. Hence, my voice will be disturbed. So please pardon me. Mr. Amir Khan, the Chairman of CCP, Khalilullah Sheikh, our dearest President Farid Alam, and my dedicated team of Economic Advisory and Government Relation. Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you very much, Mr. Chairman, for giving us this opportunity to have an open-ended discussion with you. And being the apex regulator, my members and my team would like to hear from you what is going on. Because in the COVID era, we have seen so many bumpy rides in the stock market, and the confidence of the investors were shattered. Now, I think with the passage of time, when we are improving and we are getting good news about COVID era or pandemic is over now, as far as Pakistan is concerned. So we expect that the economy is getting momentum, and so is the stock exchange and capital market. Besides this, the Economic Advisory Committee of ICAP is also working on some dear friend Farid Alam. But in my humble view, since I like to hear from you, may I request my worthy president, Mr. Khalilullah Sheikh, to give a welcome address to you and before formally handing over to you. Thank you very much. Thank you, Farid. Thank you, Chairman Saab. Thank you very much. Allah Hafiz.
Thank you. Thank you.
Ji, Assalamu alaikum and Bismillahir Rahmanir Rahim. Assalamu alaikum and very good afternoon to all the participants. A very warm welcome to this webinar on behalf of Institute of Chartered Accountants of Pakistan. My gratitude to Amir Saab. Thank you for gracing the occasion, taking out time from your busy schedule and honoring us with your presence. My compliments to our Economic Advisory Committee for organizing this series of webinars with all important stakeholders. We had Hafiz Sheikh Saab discussing about economy. We had a governor State Bank, and then we had chairperson FPR. And of course, now we have the SECP chairman with us, discussing with us and on very important topic of recovery and giving us his views on it. So Alhamdulillah, as Ashfaq Saab said, I must say that with the efforts and timely intervention of government and its various departments, Alhamdulillah, the COVID has started to subside in Pakistan. And we are seeing activities returning to normal, businesses, economic activity gradually returning to normal. We also found some recovery in capital markets as well. So Alhamdulillah, my compliments also to regulators of the country, State Bank and SECP, for bringing in timely interventions. We saw State Bank reducing the interest rates, which was very much important and very timely, bringing in the scheme for rescheduling of loans, for salary refinance. And similarly, we saw SECP bringing in regulatory relief in the form of relaxation of timelines, reporting timelines, relaxation from certain provisions of IFRS 9, and supporting various sectors of economy in that way. We've also seen SECP recently doing some good work, rather great work in terms of supporting startups. The regulatory sandbox, an amazing initiative. We are hopeful that it will pay dividends in terms of improving the ecosystem of startups in Pakistan. We've also seen SECP bringing in some very good measures in terms of ease of doing business, the amendment to the Companies Act that they brought in. And more importantly, I would like to highlight the good part that when these amendments came in, of course, while there was an appreciation for the good work done, there was also some positive criticism, which was taken very positively by SECP, the flexibility shown by them in terms of addressing those. So that's also, I mean, a sign of great leadership. Amir Saab, my compliments to you on that. Let me also highlight an important aspect, which a lot of our members have asked us, and we have been updating you about it, is about the issue of Section 247. As soon as this issue, this amendment came in, we took it up with the SECP leadership. We had meeting with them. We shared, and as expected, we found them very receptive to our positive feedback that this amendment is not in line with international best practices. Rather, there is no international precedent for that. And then it would be important to correct it to improve in the best interest of ensuring the public trust on the reporting, the financial reporting side in Pakistan. So a working group was formed, joint working group by the chairman SECP, and that working group has finalized its recommendations. And I'm sure we would hear some good thing from Ahmed Saab about this as well. Now, a bit that the institute, from an institute perspective, we all know, I don't need to overemphasize the importance of enabling environment for businesses to thrive, to prosper, to grow. And let me assure you, Amir Saab, as we have been supporting SECP in all their endeavors, you have our full support in all such endeavors for improving, strengthening, and providing enabling environment to businesses in Pakistan to grow. From institute perspective, as we are working together, this is for the information of our participants. We are working closely with SECP on the digital financial reporting project through XBRL. And this will be, it's a flagship project we are working on. It will certainly transform and improve the financial reporting process. We are also supporting SECP in their AML efforts and other efforts of improving corporate governance in Pakistan. And this support will remain always there. We, as an institute, as a premier accounting body, we feel that it's our commitment to public trust and corporate governance is unwavered and will always be on site of all the regulators and government. With this, Farisa, over to you. Again, a very warm welcome to all participants, and we are all ears to listen to the presentation of Amir Saab.
Great. So before I formally introduce Amir Saab, a few comments, and then I request Amir Saab to start. See, as Ashfaq Saab and Khalilullah Saab said that, Alhamdulillah, the effect of Corona or COVID has been relatively less profound than even by our neighbors. So God has been kind, so that coronavirus has had not that fatal effect so far, and God willing, we are through with it. However, when we were discussing this webinar with our colleagues and the corporates and others, one thing which you will cover in your presentation, I believe, was that a lot of people wanted the same sort of response from SECP which they got from the central bank. So I was astonished to see that every third man, a professional, or it was their feeling that, like, State Bank of Pakistan came to rescue, and they did whatever they could. I mean, helicopter money drop is the expectation of the corporate from you and from the central bank. But obviously, the response by the apex regulator, the SECP, is or has to be different than the central bank. And accordingly, you have done whatever you could, and while you will be covering the questions, your response will be obviously a bit different. Secondly, the few things that I'll cover in the question answers, but we will have more time in the question answers, should you agree, so that we had planned 30 minutes, but now we are managing time well. So the two things that we would love to see, that because of this coronavirus and then US and China trade war, there are certain opportunities, certain challenges, and certain opportunities are available in this region. So we would love to hear from you the response by SECP in the supply chain disruptions that the world is facing or will continue to face, and how the corporates or the multinationals of the world will find Pakistan as a destination to really help them with avoid or mitigate their supply chain disruptions. I think I'll start with questions. So let me go back to the program, and let me formally introduce Mr. Khan. Mr. Amir Khan was appointed as the chairman of the SECP around August 2019. So it's about a year. It's 3 days back. It was a 1 year complete. So he's a seasoned professional, having over 30 years of well-established career in banking and the capital markets. And good thing about him, he has international and domestic exposures in both and the fields of investments, SME, institutional banking, and regulatory affairs. A former Chevening scholar, he has an MBA degree as well as an MSc in international banking from the UK. He is also an associate of the Institute of Bankers in Pakistan. Prior to joining SCCP, he has served in senior positions at Standard Chartered Bank, Royal Bank of Canada, American Express Bank, acquiring comprehensive understanding of the corporate lending, treasury, credit risk management, structural financial products, international trade, and cross-border transactions. Before his appointment as chairman SCCP, he has served as an executive director at SCCP, playing a key role in a number of initiatives, including the launch of commodity Murabha at PMAX, agricultural-related initiatives, and introduction to non-banking microfinance regulatory framework. Since his appointment as chairman, he has extensively worked to ensure a resilient and sustainable future with an inclusive approach to regulations and supervisions of SCCP's regulated markets through digital transformation and creating enabling business environment. Reforms led by SCCP played a key role in improving Pakistan's ranking internationally, according to the World Bank Group's Ease of Doing Business 2020. I understand a lot of questions will be put to him even after his presentation. And over to Khansa for his presentation.
Thank you very much, sir, for your kind words. And I'll try to address some of the questions that have been raised, but I think if I do miss, please try and hold me to it at the end of the session. First of all, I would start Bismillahir Rahmanir Rahim. Assalamu alaikum, ladies and gentlemen. Thank you for inviting me to this forum to discuss SCCP's perspective. I will be talking a little bit of what we've done in terms of historically, but what I would like to and what we like to focus going forward, and what are some of the key learnings that we all must have, and absolutely SCCP has those learnings. But before that, I would just like to touch upon some of the key challenges that this situation presented to us. Now, there was an early realization that all crises, when they start, as you know, and every crisis is unique, but a crisis generally evolves in a way that invariably it touches upon supply chains. A crisis like this, where you start with a disease that spreads and then it converts into a pandemic, and then it transfers from one jurisdiction to another, and unfortunately many of the times such situations lead to a very serious choking of supply chain, which invariably then the financial crisis or the financial side of it overtakes the physical side, and perhaps the pandemic hasn't even reached to certain jurisdictions, and already the financial crisis has reached them. So this is the kind of situation that we were faced with. So the first thing that was important for us was continued operations and stopping any disruption. So that was challenge number one, and this was not just the markets or just the regulated entities. It was also the regulator itself. We are the apex regulator, and then there's a frontline regulator. We deal with SROs, we deal with market infrastructure institutions. So it was a very comprehensive kind of a cobweb that we had to make sure that keeps working. The second challenge that we were faced with was ensuring whenever there is chaos, there is the opportunity for abuse, and there is the opportunity for those who like to take advantage of a situation where people have taken their eyes off the ball. So that was challenge number two. In a situation like this, where we are dealing with the disruptions, where we are dealing with the unexpected, and we are always trying to manage in an uncertain time, we also make sure that nobody is able to take advantage of the situation, and at the same time protecting the interests of all stakeholders, and especially the investors. The third thing was to also make sure, and it kind of ties into the first one, but has a very significant dimension to it, that what is what are the challenges and practical issues that people are facing in a pandemic when bank branches are opening late, when people's mobility is restricted, when certain BCP processes have been organized in a separate way, and the reality on ground has actually thrown all of that into turmoil. So that was the third challenge that we had to deal with. The fourth was sustainability of markets and intermediaries. Now, you could take any regulatory action, you could have any intervention, but you also have to be very concerned about whatever steps you take, what is going to be not just the immediate impact, but the long-term impact on profitability, on returns on equity, on investor returns, on the confidence of the people who deal and operate in those markets and who rely on those markets for livelihood as well as for their savings and for their investments. So that was another challenge that we were looking at. Then there was the management of emerging risks. So on a daily basis, we would have new situations. Sometimes there would be a requirement by a particular government that certain branches of certain regulators can't open. And sometimes there would be an issue around a fire that would break up in one of the sensitive areas and how that will impact the operations of the market. So these were all emergent risks because these were not normal times and we could not deal with them in a normal way. Then obviously not losing the strategic thing and also dealing with crisis. Now, as I said, and I'm going to touch about that in a bit later, because dealing with a crisis is a bit unique in terms of the challenge, because you also have to worry about the post crisis period, what is going to happen then and how the recovery is going to be. So if you look at an example, the post 2008 crisis, if we look at it, the world recovered from it, but different economies recovered from it, but different economies did not recover from it in the same shape. So if we look at, for example, the US, it had what is referred to as a U-shaped recovery. If we look at Canada, it had a sharp V-shaped recovery. And if you look at Greece, it is what economists would refer to as an L-shaped recovery. So you also have to manage the long-term recovery and direction of the sectors that you are managing, and that is where the strategic approach to dealing with short-term problems also arises. And then finally, there was the need to have a coordinated approach and making sure that whatever we do now, as most of you are familiar, SECP is not a typical corporate registry. It is not a typical capital market regulator. We are a very unique institution in the fact that the areas that we touch upon and the regulated space that we cover is much more broad compared to many of our counterparts even globally. But how did we survive and how did we handle this? I think one thing that I would like to acknowledge here is, and that also includes the ICAP leadership and the members, is the way we got unflinching support and extension of help and extension of advice from all the stakeholders that we tried to reach out. And I think that was perhaps the most heartwarming part of this crisis to me personally. Moving on to the next area, which is the response of financial sector regulators and their effectiveness. I will not talk too much about the steps that were taken by State Bank, and coming back to Fareed Saab's comment on, and if I can say it bluntly, perhaps what you meant was that SECP's contribution was much less, some people might think, or much less visible than that of the central bank.
Expectation management.
It could perhaps be part of the fact that State Bank has a different, as you said yourself, scope and arena, but at the same time, it could also mean that some of our efforts were perhaps not so well publicized, or because we regulate multiple sectors, our efforts could not be looked at with the same yardstick as those of the central bank would be, because there is a concentration of the area that they look at, and there is a lot of dispersion in the areas that we regulate and cover. But one of the key focus, as I talked about when I talked about the challenges, was business continuity. And I think that the big issue. So, for example, if I was to just touch upon the capital market, there was a time in mid-March when we know that China had an extended break, the lunar calendar break that they have, that was extended because of the crisis, and the stock market did remain out of operation for a while. There was Bangladesh and Sri Lanka who actually had market disruptions. There was market disruption in Philippines. So there was a lot of pressure, and a lot of people said, because our stock market has a very peculiar culture to it, where people actually visit the stock exchange building. There is a lot of physical presence of people over there. And generally, we hadn't had a situation where we had relied purely on technology before this. So there were concerns, and there were some demands, and there were certain concerns which were not entirely unfounded, I would say, of whether we can actually continue to do this or not. So the first thing that we had to do, if you can move on, was the administrative measures, remote operations, thrashing out work from home policies for our regulated entities, for people like CDC, NCCPL, PMAX, PSX, making sure that their remote operations are up and running, their technology support is in place, doing live testing on weekends. So one of the most hectic weekends that people in SCCP had was the long weekend of the 23rd March, because there was a lot of effort that was going on. And again, I would say, what was amazing was a lot of times people say that we cannot work together, but I think, and when I talk about we as a nation, but I think that was a classic example of how everybody, the market infrastructure institutions, the PSX, the brokerage community, the SCCP, the mutual fund industry, everybody came together and did a lot of good work at making sure that the market opens. And thankfully, throughout this period, not for a single day the market was closed. And I think that was really something amazing that we were able to achieve. Likewise, I will just touch upon, and then there is a whole list that I can go through, but I will not bog down or waste time in doing that. But there were a lot of facilitative measures that were taken that involved stakeholder engagement, extensions of times, online hearings, online proceedings, giving time relaxations wherever they were required. And finally, operational measures. So we had actually, I think we were fortunate in that the reform process that we started last August, one of the things that was looked at was basically contingency planning and trying to manage risks, especially volatility risk in the market. And I think some of the things that we introduced, like market halts and circuit breakers, which were actually, I would say, even criticized at some point in time. And obviously, every criticism is, I think, is an opportunity to reflect on a decision taken. And that's the spirit in which we looked at. But I think at the end of the day, we know that the kind of nosedive that we had in the stock market following the events of March and going into April, it was amazing that in what orderly manner all the settlements were done, and how there was no hiccup whatsoever, and everything worked completely smoothly and without any glitch. So I think a lot of it was basically this planning, and I'm going to be perhaps touching upon this more, why planning and safety valves and safety mechanisms are important, and to think about them before actually you need to use them in an extreme situation. Moving on to the second area that was important was continued access to finance. Now, as I talked earlier, that a lot of times when financial crisis or any other crisis begins, the first thing that gets hit is the real economy or the supply side, and then it translates into finance and liquidity, and that is the worst combination, where you have supply challenges on one hand and supply side challenges on one hand, and then you also have a financial crisis or a liquidity crisis or a credit crisis that goes with it. And I think it was very important, and it was absolutely correctly pointed out that the central bank did an absolutely stellar job at assessing and figuring it out and anticipating it and putting all the right kind of steps into place to make sure that it never transcended into that territory. For SCCP's part, I would just like to say that we do have a big commitment to access to finance. That has been an overriding theme for our work over the last few years, and inshallah this year when the doing business rankings come, you will see, I'm convinced and hopeful that we will see a significant change thanks to, if you can move the slide please, thanks to the secured transaction registry, which was implemented as a potential game changer. Now, this was actually happening, we launched it in April, which was not easy. Because our consultants were offshore, we were struggling with the pandemic, there was non-availability of people, technical people, there were people who were working from home, so all of that, those challenges. And remember, a secure transaction registry is something which only, I think, less than 60 countries in the world have. So it is not something which is very unique, and what this means is that when it comes to the content access to finance, Meyer of World Bank, there are 12 criteria that they look at. And we hopefully at the end of this year would have had moved from 2 criteria being met to 7 criteria being met, and part of that was legal reform, the launch of the secured transaction registry and its active usage. And here I would also like to say that you will be pleased to know that almost 77,000 interests have been recorded in the secured transaction registry already. So it is not something that is just on paper, it is up and running and vibrant as well. The second thing, I will just say that we aligned ourselves very closely with what the central bank did, and we just went ahead with it. The third point has already been touched upon and pertains to the central bank. Then the credit availability through policy rate reduction and refinancing facility, again, the central bank. For our part, what we also did, and this is, I think, important because never before had there been book building exercise through the stock exchange, but in this this was the first time ever. And again, this was a tough period because if my memory serves me right, it was right in the middle of the pandemic, and the government was able to raise 200 billion through a book building exercise. And what it meant was that I think I'm just from my memory, I'm speaking that perhaps the first Sukuk was at K plus 80 basis points. So this was a 90 basis point saving, which over the period of the loan translated into a very big saving for the government. The other thing that was happening was basically capital formation, and where we had, after, I think even before the pandemic, we had a slowdown in the supply of IPOs. But during this period, by expediting things, by providing the right kind of framework, we were able to conclude 4 successful IPOs, 2 debt and 2 on the equity side. If you can move to the third slide. Thank you. So the third area that was of importance was to create an enabling doing business environment. This, I think one of the areas over there was allowing the companies to defer their losses on fair value investments due to the uncertainty. I think another area which I have already touched upon, the compliance and financial reporting requirements. So I'll move on to the third thing which Khalil Saab touched upon, is the innovation financial solutions. Now again, this was something, the sandbox and trying to create an innovation office was actually, again, the timing was difficult. We thought we were pressured into a number of other things, but both from an access and a regulatory environment perspective, as well as from the perspective of trying to stoke innovation and encourage youngsters or people to come up with new ideas, we felt that this was too important. And though we were pressed for time and resources in this critical time, we did not hold it back. And you'll be glad to know that we had a very overwhelming response, and a number of applications came, and we are now, I think, narrowed down to about 5 to 6 innovative ideas that will be tested in real but controlled environment. moving on to the strategic reforms acceleration, I think that was something that we realized that perhaps we had obviously a calendar that we had to follow, but during this period, we felt that now is the time to actually push some of these things even with more vigor. And for those of you who follow the news concerning SECP, you would have noticed that in the last 3 to 4 months, we have finalized an NBFC bill. We have proposed changes into the SECP Act. We have worked very significantly on reforming and consolidation of the Securities and the Futures Act. A number of regulations have been amended and simplified. The Insurance Act has been finalized. So all of this was actually happening during this period where we were trying to fix. We also were able to centralize our adjudication process. So a lot of things which we think create an enabling business environment and which were important for that to reform ourselves internally, we have done that. And just to share something which is purely internal, we also were able to hire our first batch of management trainees who are right now inducted. They were actually inducted in June. So even that was something which we did not hold in this time because we felt it was very important part of the overall strategic reforms that we were doing. Finally, as you must have heard the term we normally use, LEAP, which is our flagship automation program. So we expanded its reach into 2 areas, and one of them was actually the launch of first intelligent chatbot by any public sector organization, or at least a regulator for sure. And I'm focusing on the fact intelligent, something which can think and intelligently answer your questions. It is right now in its inception. It has been introduced, I think, in March. We hope that it will pick up, and by the end of the year, it will have enough learning. It has active usage at the moment, and there are a number of people who are testing it. And I think this will be a big change in the way we help our regulated entities or those who deal with us to reach out to us. Another thing was the searchable law repository, which has also been launched during this period to make life easy for people and provide all the things in one place. This is an ongoing project, and it will expand as time goes by into actually placing our orders and also linking it with other law cases to make it very easy and transparent for people to see and find answers that they need. I have talked about this, so I'm also a bit looking at the watch. I think we are doing all right on the time. I know, but I'm just going to briefly touch upon this slide. You can populate the slide. So over here, I think one of the key things was, I mean, it's basically all about reaching out to people and discussing everything very openly. So one of the things that we were very religious about was to attend the weekly, as you know, that we are a board member of the IOSCO, and they had weekly calls, and we were very religious in attending them and sharing experiences, finding out from them what is happening in their markets, how they are reacting, and sharing our problems and getting feedback constantly. And that is an ongoing process that we have followed very meticulously during this period. I think also I would like to touch upon the fact that before the crisis started unfolding in a very strong way, we also had very, very significant use of Zoom and other technology to have very wide public consultations throughout, whether it was with the Mudarba Association, the broker community, the mutual funds, insurance sector, even the non-bank microfinance institutions, and also our market infrastructure institutions. And that I think was very crucial in constantly having a very close, really coordinated approach and having a very close understanding of what the problems were that people were feeling and being able to respond to them very quickly. With that, I would just move on to the lessons learned. I have, I think, heard this statement in the opening comments more than once that COVID is behind us. With due deference and my respect, I would just, I don't want to spread any fear or any gloom, but I would like to say that no threat is over until it's over. And unfortunately, I think we have been very fortunate. I think it has been a very well-managed affair, not just from a regulatory perspective, but even from a national level perspective, as a health crisis management perspective, it has been very well managed broadly. But still, I think the winter is almost upon us. The temperatures are going to go down. The opinion of global experts is divided on how it is going to be, whether the virus has the capability to mutate, whether it can develop new bites that can come back and on. So I think we should not take our eyes off that risk, and that is very important because. And the other thing that I think is that pandemics do have a history of coming back. Some have been more successful, some have been less. Those of you who are students of history must know that Spanish flu did come back, and it came back much stronger. So that is the first thing that I would like all of us, and that we have learned at least. The second thing is that black swan events do happen. They're not just a theory. And when they happen, they do bring with them certain challenges. And I think what is important is that when you have these challenges, the two things that are going to be very, very important are, one is, have you built resilience? And if resilience exists in the way you operate, in the way you regulate, in the way you conduct your business, then you will be able to you will be in a better position to respond to a black swan event. The other thing is that all black swan events or exceptional events do have some kind of a opportunity in them, and if you are well prepared, then and you have the right kind of mechanism in place, then you can always try and take advantage of that. And that is also crucial, and that's a lesson that I think we have learned and actually practiced as well. Crises have lives of their own, and they are difficult to predict, and will invariably have unanticipated consequences. So many of you must have heard about Henry Mintzberg's 5 Ps. And now there is in the management literature now, they are talking about slightly modified 5 Ps, and I would just very briefly touch upon them. So I'm sorry, I'm just going to access my notes here. So the 5 are the position. So the first P is the position. So where are you positioned inside the industry in which you operate? For example, the positioning of a hospitality or an airline industry today would be very difficult, and even operators within that would be very difficult compared to somebody who is supplying home office furniture or home office equipment for that matter. Likewise, how do you plan? What are your plans to bounce back when you actually are confronted with a crisis? The third thing is how culturally prepared your organization, your perspective. That is very important. What is your organizational perspective, and how culturally or administratively you are attuned to trying and overcome a crisis that you have. Projects are, what are those things that you need to set in motion that will actually help you overcome the problems. And the final one is the preparedness, which I talked about earlier on, that if you are agile enough and if you are well prepared, then you are in a better position to overcome them. I think we've all heard of the term alternate delivery channels, and ADCs are generally referred to as something as a sales management thing, or somebody who's just trying to use multiple alternates. I think this has given us a different perspective. Alternate delivery channels now have to be looked as what are the alternate outreach channels that we need for delivery of services, information, sharing of information, decisions, customer feedback, and solving problems, supply lines, how do you get your product across to the customer, how do you advertise for it. So a lot of the things that are talking about, so everybody has to try and broaden the foray or the spread of their outreach mechanisms are concerned. Then I think one thing that perhaps will resonate well with this particular group is the robustness of enterprise risk management framework. It is absolutely paramount, and I think it can't be overemphasized as a result of this pandemic. Finally, gaps in health and safety standards at workplace must be addressed. Generally, I think globally people hadn't paid much attention to this area, but I think going forward, it has to be focused on. And finally and lastly, I would just say that we have learned from this that every cloud does have a silver lining, and you just need to be prepared to take advantage of that. And with that, I promise I come to the last slide of my presentation, because I think Fareed Saab is raring to go with the questions. So I think that if I was to share 7 to-dos, I think the safe workplace is absolutely paramount. We all need to focus on it. And these are areas I think that we as a commission are going to be very concerned about, or be looking very closely at and encouraging and promoting. So I think this is something that that is to me absolutely, from my institution's perspective, from the regulated entities perspective, market intermediaries perspectives, people whom we rely on, it's very, very important that the workplace safety is paramount. Protecting investors and preventing market abuse is the second thing that we will continue to focus on and build on. And I think over here, the role of technology, the role of XBRL, that as it was mentioned, and many other technologies, RegTech, we are working on in those areas, and I'm sure there might be some questions even later on in that area, but that is going to be there. The focus on corporate governance, I think, is also going to be much more. We also, you know, that we had changed the code of corporate governance from a mandatory to a compliant explain basis, but I think that is not enough. This crisis has led us, and we need to look at the whole space slightly differently. How can we actually create a more robust industry participation of professionals like you to actually imbibe corporate governance in spirit, rather than just an exercise that has to be done and forms have to be filled. So I think that is an area which is very, very close to my heart personally, as well as I think it's a crucial commission focus area. I think the improving business climate will remain high on agenda, because we need to create jobs. We need to create, which takes me to my next slide, next point, sorry. Focus on the small business and startups. That is an area which is going to be accelerated and will continue to be a major theme for our actions and focus and efforts and even resources. And again, closely aligned to it is promoting innovation, as we have already demonstrated through the sandbox plan, or the sandbox venture. So that is going to be there. And the final one, by no means the last one, I think this is perhaps one of the most important ones among the 7 to-dos, is leveraging technology and using it to actually. So that brings me to the end. But before I close, I would just like to make a few more generic comments. And I would like to be, I'd be the first one to admit that I have shared with you our regulatory experience, our responses, and how we looked at things, how we expect to look at things in the future. But I would not gloat or claim that we've done a stellar job so far. I think that is for time to judge and assess, and for you people as professionals to comment on whether our responses were effective or not, whether they had the right desirable results or not. But I do honestly and earnestly believe that the initial indicators are definitely positive. We have definitely come out strongly, much more strongly than what we had expected at the beginning of the year. The year meaning the calendar year. I think there is a lot of thrust and hunger at our end for structural and regulatory reform. We'll continue to pursue it zealously, fearlessly, but virtuously. I think to sum it up, the launch of the STR, we also were able to launch two, not we, but we were able to facilitate the launch of two exchange traded funds during this period. I think that was also a very good thing. The fact that the average trading volume, I would just share some numbers with you. The July-August 2019 period, the average trading volume in shares was 75 million. The average trading volume in the July-August 2020 was 450 million, from 75 million up to 450 million. The traded volume in July to August 2019 was 2.8 billion. And the traded value, of the traded value, of the July to August 2020 period, from 2.8 billion, it went up to 17.4 billion. So these are a few examples of our perseverance during these difficult times, and the fact that also the corporatization drive also continues. And in July, again, we were able to register nearly 2,000 companies, which is slightly below our pre-pandemic rates, but still quite reasonable. I would be the first one to admit that there is a lot more to do. And improvements in business climate, reducing cost of doing business, enhancing ease of doing business, creating multi-stage financing ecosystems, and linking them with real economy through electronic warehouse receipts, private equity and venture capital funds, housing, infrastructure funds, growth in emerging market listings, promoting and supporting small innovative businesses, and continued development of human resources are absolutely important. And embracing technologies for regulation, for interaction, and for our internal processing is also going to be a very, very important area for us. With that, I think I have pretty much covered everything. I would just say that I have a lot of hope for the near future, inshallah. But at the same time, I have a guarded concern to be prepared if things do not proceed as well from a pandemic point of view as we would like, or as we hope today they will go. So thank you very much for that, and I'm available for any questions.
Alfonso, thank you very much. A lot of comments and questions, and we will use the time in a way that more and more questions can be answered. First of all, I think a comment, because I represent capital markets. I'm glad that you touched upon the fixed income part, because a lot more people should understand that in the world, the capital market is shares and the fixed income, and major portion of the capital market is fixed income. But for reasons beyond our comprehension, and it will take a lot of time, there have been reasons why the fixed income market could not really fly here. But you just mentioned yourself that just the change in the platform, in the PSX you used, and everybody, as a Pakistani, I feel pride that a platform is available using which the government of Pakistan has mobilized 200 billion at, you rightly pointed out, at 90 basis point lower in a more transparent and efficient manner. And secondly, sir, you rightly mentioned that 900 million shares or 800 million shares are being settled, and billions of, let's say, rupee transactions are settled at the stock exchange every day. And we have never ever felt that X money was given to Y or Y money was given to X. So we have a very transparent, very time-tested systems in the corporate world. And if you really encourage them, this platform can be utilized in a more and more efficient way, better for the Pakistanis as a whole. So one comment that in the situation that we were into, historically corporates take a back seat while in crisis. But Pakistani entrepreneurs, a lot of people want a comment from you. That, do you think that the Pakistani corporates or your regulators are really resilient and brave-heart people, that even in the worst of the crisis, they did not take a back seat, and thanks to SCCP and the State Bank, because of their targeted responses, they rose to the occasion, and so did the corporates. And now that the economy is hopefully back on track and we are recovering, but it is a dynamic process, and you will understand, and you might comment on this, that what we started off saying, it was just to solidify and to strengthen the earlier signs of recovery. So we have to there are a lot of space and cover a lot of space, but the signs are definitely really better. So coming to a question, starting from this capital market. So liquidity and transparency are the two major important pillars of the capital markets. How do you see the regulatory environment evolving in Pakistan in terms of safeguarding investors' interest and making capital markets more transparent? And I'll put you 3 to 4 questions so that you can answer as per your ease. The second question is on the level playing field. The equity investor of Pakistan wants a level playing field, while the real estate people and other asset classes investors are the people continue to feel and ask us that what is the difference between the investor of the stock market vis-a-vis a real estate investor, because the know your customer and the FATF and every regulation is so harsh and hard on an equity investor as compared to the investors in the other categories, other asset classes. Let's take these 2 questions and then.
Okay. So if I can just take up first quick question, I think the corporate sector in Pakistan is amazingly resilient, and given my banking sector experience, I have no doubt in my mind that some of the corporate leaders in this country are much more innovative, creative, and focused on actually paying back to the country than what we would see in many other jurisdictions. So, and the other thing I think is that the element of patriotism, I think, in corporate sector, I find to be very, very high. So in a lot of other jurisdictions, when we read or when we see them, the level of patriotism is perhaps takes a backseat to the profit motive of the organizations. But over here, I personally feel that that is a predominant factor in the corporate sector. And you're absolutely right that we can very clearly see whether it is cement, whether it is automobile, whether it is many other sectors also, fertilizer even, where the uptake is definitely, it seems like from what we are reading in the press and what we are finding out in the what we are finding out from research, it seems like that's the case. Now coming to liquidity, transparency, investor interest, and protection of investors, I have to say something which might not make me very popular, but I think the truth is better spoken over saying something which is politically correct to say. Equity risk by nature is different from fixed income risk. And I think in this country, and I'm not saying that the person who asked this question has any confusion in their mind, but I'm just taking this opportunity to touch upon this, that equity risk is very different from fixed income risk. So if you are investing in a bond, you are guaranteed your principal, hopefully. If you are investing in a government bond, you are definitely guaranteed your principal and your interest. If you are investing in a AAA rated commercial bond, then obviously again, there's a very good likelihood of your principal getting paid plus a profit. But if you are taking equity risk, your downside isn't really protected in the sense, what you should have protection over is that there is no market abuse, there is no manipulation, there is no false disclosure, there is no withholding of information, there is no other inappropriate market practice going on. But if the business fails for reasons beyond the control of the management, or because of market change, or because of a pandemic like this, then you should know before taking an equity risk that you have undertaken an equity risk, and this could actually erode your savings. And that is something which people must understand, or investors must understand. Having said that, the fact about, I think from what I understood, liquidity for what was being asked was that whether the SECP is focused on trying to create an environment where the traded volumes increase, where the intermediation cost comes down, whether they mean that there should be financing alternatives that should be available, and people should be readily able to enter and exit market at a very low impact cost. So definitely SCP is very, very committed to all those things. And I think all the changes that we have been bringing about, and Farid sir, as you would probably very well know, because you've been part of many of these initiatives, you even led some of the teams that we have formed in this regard, that since late August last year to this, we have had a very, very active dialogue with the capital market operators, and we have been sharing virtually, these are precisely the themes that we have been sharing and focusing on. So absolutely, we are very, very focused on that. Now, just transparency and market abuse, a bit of word on that. I think that is also something where we are very focused. You know that the surveillance system, the preliminary surveillance system is there already, that has been incorporated in the stock exchange. And this is an area where I think there will be significant development in the next 1 year or so, as the trading engine comes through, and then the full operationalization of the existing surveillance system can actually take into come into action. And at that point in time, I think, but beyond that and before that even, this will remain a very big focus. Level playing field, I think that's a very fair criticism. Unfortunately, I think that this has been the situation in the past, but I am hopeful that this will change. And the reason for that is because of the AML pressure. And right now, I think the industry or the regulated sectors are right in claiming that it's an unfair competition, but I think it's going to change very soon. For those of you who are familiar, you know that there is a DNFBP focus or designated non-financial business person focus in the overall AML regime. And the DNFBP focus covers 4 areas, one of them which is the real estate agents. And this area is going to receive a lot of attention in the near future and going forward as well. So I think that at least the AML part of it will be taken care of. There is also initiatives at the government level to look at real estate and regulating real estate in a phased manner. There's a committee that is working at the federal government level. It has participation of all the key stakeholders. I have also shared my thoughts on special invitation in that committee. So I think this is an area which is very rightly pointed out, but it has all the right attention and focus at this point in time, and hopefully I think we will see positive developments in this regard.
So you rightly pointed out that the capital formation in the country continues to be far lesser than what should be. In your view, and the second part of the question is that the investor base in Pakistan continues to be insignificant. We have had various attempts, but the investor base continues to be low. We understand that in Pakistan, there are about over 6 trillion cash available to the people, where now the interest rates are down, but even when they were up, people prefer to keep cash with them instead of investing in the fixed income, government securities, or shares, or any other class. So, and what, in your view, will change the average Pakistani saving habits of coming out of this mindset to keep holding their savings in cash?
Yeah, it's a difficult question. I think we have, as you said correctly, tried multiple times. Even SCCP has had a very active program by the name of Jama Punji, in which we have invested significant resources, time, and people, and given some of our best people the go at it. So it is challenging, but I think there are. I just feel that there are certain areas where capital markets, as you correctly pointed out in your previous question, has a slight disadvantage. So I think one of them is perhaps some of the government saving schemes that are available. There is the problem of the lack of even playing field. But I think if you look at, and then also if you look at that, there is I think a general tendency not to save too much. Our saving rates are quite low also comparatively. And I think then perhaps also um, less competition and less options also being available to investors. So, for example, I mean, if you look at an investor who can invest in ETF, as you know that we were very keen last year to introduce ETFs, and 2 ETFs are already trading, and we believe another 5 or so are in the process of being of coming to the market. Now, these are low impact cost and easy or high quality instruments that can be there. So the point that I'm trying to make is that we have to create a competing environment. We also have to lessen the burden of our regulated entities. So as you know, there is a proposal right now that is being considered regarding fund management being allowed to brokerage firms with certain checks and balances. So I think it's basically, it comes down to actually incentivizing the regulated entities, making the regulatory burden less, encouraging competition, supporting new product development, but then also trying to fix some of the more, what I would say, principal problems or challenges that we have in terms of distortions. So as distortions get solved out, but I think this is a good opportunity with rates this low. I think there is every possibility with new products and more competition and some regulatory reform. All of this can hopefully move the delta, but it will not be, if you ask me frankly, it can't be just one small thing which will change. There will have a lot of people will have to do a lot of things to move the needle on this. But right now, I feel a lot of people are doing the right things in this regard.
Great. Sir, carrying from, taking a cue from your last comment, what you feel as we as professional chartered accountants in the industry or in the practice, what we can do, because whenever we meet the youngsters, and there are hardly any success stories in the last decade on the arena of the corporate world. These Angros, Hussain Dawood, and the Mia Manchas, but beyond that, there are hardly any new success stories available to the youngster who look forward to the people who are really making it to the next levels. So how can SECP or how can we play a role in bringing this platform, giving this Pakistan Stock Exchange or other avenues so that they really shine? And the second part of the question is, when I started off my career as an investment banker, I see that from the year 2000 to 2006, there were a couple of great listings in Pakistan, but that have since dried, and we hardly find new listings. People say the corporates, they are reluctant. They say that we have to follow a lot of legal formalities, and there will be all eyes on them. And sir, your regulators often complain that you are a very, very tough regulator. And the central bank, they say, even if some of the listed companies, they have to answer both. But they say that SECP, while apprehending us, don't really take into account our track record, our intention, and they perhaps, one of the comments was that perhaps the law does not give a power to SECP while putting a penalty. For example, somebody said that we had an announcement which had a mistake, and in about 10 minutes of time, we recovered that the corresponding figures of the published accounts was not right. So we corrected it ourselves, but that was the day, and till penalty, they say we were not really given any incentive of the track record of the good disciplined things that we had done in the years, and our trademark and the brand was a bit tarnished, because the law says no. Even though they came up with their they picked up their fault themselves, but the regulator came harsh and hard on them. So, sir, concluding this question so that you can answer in a way, in Pakistan, the corporates like Khadi or the local brands which have really taken have been a success, like Shan, Khadi, Food Panda, Daraz, the Guts and Hilton Farm, etc., they don't find it feasible to list. How can we, or you as a regulator, as an apex regulator, can attract them for listing, because it will be for everybody's interest that they list. And concluding, when we and our friends from Pakistan go abroad, we put a theme of the theme that we have a younger population, we have this and that. But when the Gora investors ask us, well, give us at least half a dozen companies which really tally with your theme. They're hardly consumer, no Unilever, no nothing. So what we offer them is a story which is really sellable because of the population pressure and because of our younger population saga and etc. They want to invest in the consumer or anything which is growth stories, but they end up investing in OGDCL, the PPLs, and the others, which they say that we can take. These are all raw material sort of things. So how can SCCP play a role, or we as professionals can attract the sponsors to come to the boat?
Okay, so I think opportunities for youngsters and success stories are missing. I thank you. I think that's perhaps a bit harsh, because I think there are success stories. I think both. Now, if you look at the demographics of Pakistan, because you talked about them, so we have a very wide young population. That's absolutely true, but it's not very homogeneous. So you will have on one extreme people who do not have, who are not very highly skilled, but have a very high will. And then you have the university graduates or your members who are people who are very high skilled and very high willed at the same time. Now, if you ask me, I have witnessed success stories in both categories, the low skill, high will people as well. And if you look at some of the non-bank microfinance companies that we have, and they now have, I think, more borrowers than the microfinance banks actually. And the portfolio now I think is over 100 billion, which for that particular segment. And there have been amazing success stories in that arena. In terms of the professionals, I think there are success stories, but not so many perhaps in the job related areas, but where people have actually gone ahead and taken the chance to actually be entrepreneurial. There we do have, I have not been myself to any of the, we have been reaching out to a lot of incubators and university-led growth initiatives or startup initiatives that are going on in the country. And I unfortunately haven't been able to make to any one of them myself, but one of the commissioners who is designated for this purpose has been to, and what we hear from him, and our teams regularly visit them as well, that there is a lot of activity. And even though we might not have had a number of success stories in the recent past, but I think the future looks optimistic. But there is one more thing that I would say, that for this to happen, and for many of the questions after this that you raised, these require a very coordinated approach between multiple departments in multiple arenas of the federal government. So SCCP alone may or may not be able to create a difference, but these issues require a more collaborative approach. And the great thing that we've seen in the last 6 to 9 months, I think, is this kind of collaborative approach taking place between a number of government institutions. And I think as more of that happens, then some of these traps, or what I would say glass ceilings, can perhaps be tackled and overcome. listings have dried up, and yeah, that's perhaps partly a function of the economy, partly a function of over-regulation. But I would like to address more the issue of tough regulation, blind enforcement, penalties that were applied robotically. I think these are things that we are very alive to. And one of the initiatives that I think at least most of this audience would be very familiar with is the way we, in a very calculated way, have moved to centralized adjudication. Previously, we had 6 or 7 different areas adjudicating this particular enforcement side, and we have now brought it all together under one umbrella. What we've done also is to remove those kind of things. We have created the concept for the first time of a penalty grid, where every offense is basically weighted based on the sensibility, and there are guidelines where we've taken away discretion to a large extent from the people who are imposing the penalties to remove that harshness element or the bluntness element. But at the same time, what we've done is under that penalty grid, we have provided the ability to the adjudicating officer to do 2 things. One is to actually use some measures where he feels that the offense is very serious, and over there impose a higher penalty based on a grid again and based on a very codified process. And at the same time, if there are mitigating circumstances like the one that you talked about, then lower the punishment, but it all has to be documented. I think this is something which will change. It will take some time, but the Commission is very much focused on this. Local brands are not finding it feasible to list. So I agree. Part of it, as you know, relates to us, which is the listing requirement side. And you know that the IPO regime has very significantly been revamped, and perhaps in certain areas we have gone beyond what a lot of people were comfortable with, especially on the space of disclosure-based listing. So from a more principle-based to a disclosure-based, we have now, I think, reached that level where it is going to become easier. And that's why I think we've had 2 IPOs, at least one of the 2 IPOs has happened or have happened because of the ease of this. We are also trying to reform the debt side even more. And as I said, there are 2 sides to it. There is the competition side, there is the regulation side, and then there is the tax and those kind of things that come into play as well. So at our end, we are committed to these things, and we'll continue to do that. Half a dozen companies in the space. What we can do is, I think, principally, this is the job of the people, the market participants. We just have to support them in terms of making sure that the regulation is simple, it is easy, it is, as I said, convergence of laws, making the regulations very, very simple. If you look at the issue of capital regulations that we recently changed, you will realize that there were very significant changes that were made, and a lot of conditions that were there previously, which made it very difficult, have been removed. So that thrust will remain. We will, I think there was a regulatory overburden, definitely, when I took over, and we have been at it with a very systematic, methodical, and consistent approach to try and reduce it, and we'll continue to do that.
So we are running out of time, but there are 2 questions which I want you to kindly address. One is that we are thankful to the central bank and SSCP of providing an opportunity to the non-resident Pakistanis to really take benefit of the developments and the takeoff stage that Pakistan looks in really poised for. So if you want to touch upon this non-resident Pakistani, the product that is now ready, and you had played a role, and you rightly pointed out, you set the subcommittees, and I think, when are you first launching it? And number 2, you just concluded the last question with can SECP attract these local brands who have really gained international traction, and how to any incentive for them to list? although it's a fiscal and it will be the government of Pakistan taking but are you convinced that if these companies list, there will be a lot of foreign investors coming to Pakistan and taking benefit of because earlier these the high growth companies are the ones where international investors really go for. Otherwise, these sunset industries, oil and gas, and the banks, because as I was just saying that instead of buying OGDCL, our Gora investors say, why don't I buy Brent? So these, if you want to comment on this.
Yeah, I did not get the first question. I'm sorry. So if you can repeat that again.
This was on the non-resident Pakistanis having a bank account now can through mechanism.
So I think the first thing is, I think it's just I would give the complete credit to the government as well as the Governor State Bank. I think they are the ones who were instrumental in launching that. When we heard of it, obviously we did reach out and they were very receptive. As I said, that there is this amazing, in the last 6 to 9 months, the best thing that we have seen is that all the different organs or departments or regulators are working very closely together to try and resolve the problems and to actually achieve the collective objectives. And I have been part of public sector for a long time. This is perhaps the first time that I'm seeing such close coordination and willingness to step up to help each other and to try and expand the scope of services. So I think this is a great initiative that NRPs will now be able to tap the capital markets. Our hope and expectation and request from the central bank has been to also look more broadly at mutual funds, at ETFs, and eventually at REITs also, to actually come up and cover them through this portal and expand the scope of the portal. So that would be great. And there, obviously, they have some very reasonable questions that we have to address, but that is definitely the direction we are going to take. Now, the need to have options for foreign investors is absolutely something paramount. I mean, that is something that we think about all the time, and that is something which is on the forefront of all the policy reforms that we are taking and the changes that we've been making to the regulations. But you're absolutely right, those incentives must be given to local companies to list. We have been in dialogue with FBR very extensively, even at the time of this budget, even before that, and we'll continue to push. And it's not just, I think, the listing. I think there are things that need to be done on the private equity and venture capital side. There are things that need to be done on the mutual fund space. So there are things that need to be done on the REIT space. So these things cannot flourish unless there is a coordinated approach between the tax and the capital market side of the state. But what I can assure you is that we are very clear. One, we are making the changes that we can at our end and reaching out to those other regulators or those other government organizations. And as I said, that by and large, we have been receiving a very favorable response.
So this circular debt issue seems to be around the corner of resolution. How hopeful are you? Because the corporate and the capital market really will really welcoming any such initiative which the government of Pakistan has taken on the IPPs, and because the accounting profits as against the cash profits are huge, but then when it is just receivable, obviously the investor class does not really give the investee company that much price discovery impact. Number one, and number two, the pension fund, it's really being talked about, and it is very close to our heart, my heart, that in Pakistan, the retirement benefits of the private sector corporates and even the government of Pakistan own employees, these are just a budgetary item as against a funded item. So, and apart from Jubilee or State Life, and the small contribution made by the Sindh Pension Fund and the Punjab Pension Funds. This area is really wide open for the government of Pakistan and the SCCP to look into, because I mean, shortly we are approaching a time when in about 6 years time, it looks that the retirement benefit payments will be higher than the current salary of these people, of the government employees.
Yeah, I think absolutely. I mean, I think perhaps the IPPs was more of a comment rather than a question, and I agree with you that this is a brilliant development, and this will this is perhaps a very positive development. So, but moving on to pension fund, I think if we look at the capital markets, one of the things that perhaps we did not talk about was the role and the significance of institutional investors. And while we do have mutual funds, we still do not have the pension side as active, because at the end of the day, a lot of the investment that flows into the capital market on the debt side or on the equity side has to be coming from institutional investors, because they are the ones who can actually manage it more efficiently and significantly. So the question, I think, is more on the public sector side, that whether, and I think one of the things is that right now the structure of defined benefit basically needs to be looked at, and at least for the new entrants, the need might be to move towards defined contribution, and that alone will, I think, start changing the dynamics. But beyond that, this is a very serious subject. The good thing is that for the first time, there is a lot of focus. These are things that we have been advocating and talking about for perhaps a decade now in this institution. But this is the first time that we are actually getting traction, and at the senior most level, there is a recognition of these challenges and actually a commitment to try and solve these. So it is a complex issue. It is not something which can be fixed in a very short period of time. As you know, that even across the border, when they tried to fix it, it took a very long time. And it is something which is going to be, but the fact is that if we start doing it, that is important, and this is absolutely crucial for the growth of capital formation, for capital markets. Pension space is extremely important for that, and we are extending whatever support is being asked from us.
So there's a lot of questions, but my last, as we are running out of time, and the president and my committee members would be expecting me to conclude this session on time. But one question and a comment. Sorry. So you might be knowing that each year the Institute of Chartered Accountants of Pakistan and Institute of Cost Management of Pakistan, we come up with this corporate report awards, and we really encourage the corporates to come up with the best practices and best, and we on a well-defined and highly, I mean, each year ever improving criteria, we rate companies and we give them awards. So now, taking advantage of the presence of the president of ICAP, Mr. Khalilullah Sheikh, as well, there is a comment that, and I should be fair because it's my profession, but they say that for the textile, for the cement, for the fertilizer, they get every type of detail. But when an investor wants to invest in a pharma company, the details asked by us in Pakistan are not good enough for somebody to really take a view on a company. So I understand that it will be, and for a pharma company, there is a report called IMS, which is a very expensive report that somebody who is very serious investor has to go for. So we would be requesting you on behalf of the president of ICAP, I'm just saying that this to really join us on the as a chief guest on the on the report ceremony that we are holding this year. And a couple of questions, but I would need a comment from my committee, so that should we be concluding on 4:30 and requesting Hina Usmani Sahiba, or we should continue? Okay, I think in the best interest of time, I request Hina Usmani, who is the Vice President of ICAP, for her vote of thanks. Over to Hina.
Thank you very much, Farid Saab, and thank you very much, Amir Saab, for your wonderful session. It was really insight and valuable insight and thoughts where you have shared. Despite we have very strong institutional bonding, it is very thankful to you to give your valuable time for sharing one-to-one insight and in detail about the recent COVID impacts on the corporates and capital markets perspective. And I fully agree with your views and your thoughts about the initiatives which we need to take individually as well as jointly for the country and for the overall business community as a whole. As far as the business community continuity plans are concerned, I think everyone has experienced that this is the worst business continuity example which we have experienced, and everybody thought and they have planned them. It has given an opportunity as well to everyone to take things forward in a very, very positive manner and to cope up with the negativities which it has brought to the business and the business community sector. So thank you so very much for your time once again. And I would also like to emphasize here that I fully agree with your views on the small sector, because I believe that this is the time that this is the most affected sector, which needs a lot of support and a lot of insight. And being as regulators in our individual field, we can collaborate our efforts and support this, because you know, as ICAP, at ICAP also we are taking a lot of actions for digitalization, for like this is the first time we are holding online examination, as you have discussed about the alternate mode of channels. So we need to think about these alternatives for the business community as well as for the profession as a whole, and how we could collaborate our efforts to take it forward. As you could see that our profession, we have financial management skills. We could support the small sector. You are the regulator. You can regulate the business from for ease of doing business. We need to collaborate with FBR. We have to connect with central bank, and everybody should make their efforts jointly to take things forward, because this is the most important time that if we collaborate and our focused approach will definitely make things better for everyone. So thank you once again for your valuable time, and I'm sure that our audience must have learned a lot of from your insight and from your detailed presentations. And I thank you, our President Saab, Mr. Khalilullah Sheikh, for his insight, Mr. Ashfaq Tullah Saab for taking this opportunity, and the whole Economic Advisory Committee. Mr. Farid Alam Saab, thank you so very much for conducting and concluding and taking all the questions very minutely. And the whole team of ICAP led by Hurul Ain and the Marcom and IT team. And I'm sure these kind of sessions will help our community, our profession, and the whole our country as a whole. Thank you so very much, everyone. Thank you, Ji.
Thank you. Thank you. Lovely.